Good morning, everybody. Hope everyone's doing wonderfully well as we get started on this Thursday morning. We got economic data that just hit 30 minutes ago. Markets are actually rallying on this data. We had jobless claims. We also had some other key data like retail sales, and the markets have been honing in on retail sales as being very important because it speaks to the consumers. The consumer still spending. And the answer today, based on the data, is yes. Granted, might be on credit cards, might be running up debt, but hey, they are still spending. All right, so we have that going on here. We have the markets up on the day thus far, but I am going to issue a warning that let's see where this market closes today. Does it still close here above this kind of triangle of warning or danger zone that I have in the charts that we are right now pre-market above? But let's see where this thing closes. I'm very curious. So let's take a look at the pre-market action here. If we jump right in, let's go to the economic data. Retail sales this morning, month over month, 1% versus 0.4% expected. So again, a much better number there. Initial jobless claims. Remember, this kickstarted a rally last week. Even though jobless claims historically are not a big mover, nonetheless, this number last week caused that big rally. This week, again, better than expected numbers. Only 227,000 people filing for unemployment versus 236 expected. All right, lastly, these two numbers don't have as much an impact on the overall market sentiment, but Philly Fed Manufacturing Index -7 versus 5.4 expected. So that is worse than expected on the manufacturing side. And Empire State Manufacturing Index -4.7 versus minus 5.9 expected. There should be a minus in front of that. So again, these two numbers right here, not as big of a deal. The market is focusing on these two, and that's why we saw this big push up pre-market here, guys, on the S&P 500, a big pop, although we are starting to stall out right here. Now you see all these trend lines down here. This is that triangle of death, if you will, and I want to bring that up here real quickly. So let's get right into that. Bear with me. Let me erase that so we can go to the charts. All right, so what we have here is a market that yesterday we just closed on the lower end of the triangle, the danger zone, if you will. And this to me is a huge level of resistance. So right now we have the S&P trading above this level pre-market, but let's see where things end today. All right, I'm very curious myself. Now, if we do push up, let's take a look at our fibs and see what our next level could be. Now, if we do continue to push up, it's pretty clear cut here. Our next level is a former gap fill right here, pivot high right here, and this is the 786. So notice the 618 Fibonacci is right in the mix too here. So not only are there three trend lines, but there's the 618. I could probably count on one hand how many times a market went through this many resistance levels. So it'd be very, very rare if we are able to close above today and confirm. And I'm going to mention that confirmation because the markets, especially with institutional involvement on options expiration, has a tendency to whipsaw the little investor, the small retail investor. So be very, very careful here, guys, if they do even close us above this triangle of death, if you will, because again, like I said, I could count on 5 fingers probably how many times a market successfully gone through this level and confirmed above versus a whipsaw kind of fake out from the institutional money. Now, why would this week particularly be a fake out week? Well, the essence of it is pretty simple. We have to remember this is options expiration week. What happens during options expiration? I think this is important for every investor to know. I view it as verified investing's job to educate you guys on all the nuances and the games that the institutions play. So what the institutions like to do during options X week, when a majority of the options expire on Friday, they like to kind of whipsaw the small investor. So they'll want to push things up, getting the small investor to jump in and buy lots of puts, thinking, oh my goodness, this market's going back to all-time highs. And what they do then is in the remainder day, Thursday and Friday, today and tomorrow morning, they like to whip that move in the reverse. So oftentimes what we call is an early move early in the week can be often reversed late in the week. So we've been going up early. We'll see if the institutions want to pay out a lot of money. Now, For those of you that don't understand the options X game in that respect, remember that 99% of all options are sold by institutions that take in a premium. When you buy an options contract, you're paying a premium on that to own that contract, right? And so the institution makes that premium as pure profit only if that options contract expires worthless, right? So if it expires in the money, they either have to pay out or it cuts into their profit. So institutions will say to themselves, let's figure out on our computers where we maximize our profits on stocks, on the S&P contracts, on whatever it may be. And what they'll do is they'll say, okay, listen, we make $20 million if all of our options expire, if these expire worthless to the public, right? But right now we're set to only make 10 million because some of them are in the money. So let's use 5 million of that to push that stock or that market in a direction that makes us make 15 million, right? So again, they essentially will use some of that capital to make sure that a market expires or an options contract expires worthless or as close to worthless as possible so that they can maximize their numbers. Now, these are secrets that generally the public doesn't know, but it does happen. Remember, if you're slated to make $100 million, if something happens, why wouldn't you use 20 million of that to ensure that it happens, right? Versus potentially not doing it and losing that $100 million. Think about it like that. All right. In any case, back to the charts we go. We'll keep an eye on the markets. If we flip to the NASDAQ pre-market, we can see again, NASDAQ was trading kind of sideways to slightly green early. Then we got those jobless claims numbers. Nice push up. We are stalling a little bit here, but nonetheless, nothing too crazy on the charts. All right. By the way, we're going to go over some earnings numbers here. I have a big level on Walmart I want to share with you. All right. So here's Walmart, guys. And if we go to your intraday chart on Walmart, check this out. Here's your intraday chart on Walmart. Walmart reporting very good earnings this morning. The stock is ripping higher. In fact, the stock is now up 9% on the day. But look at this. There's a very key level here that I have that basically we are just crossing pre-market at $75 per share. To me, this is actually a good short. If I was at my computer right now where I have my trading set up, I'd actually be shorting Walmart above this $75 level. But the point is, you have a trend line here. You have an overbought scenario. Walmart did report very good earnings. One thing that they said that is a little bit concerning is that more and more shoppers are coming to them versus staying at higher end retailers, right? So, I mean, you have certain fancy retailers, your grocery store outlets and so on and so forth. More and more people are starting to shop at Walmart. And again, in general, what do we know that means? It means that prices have gone up and it's making more and more people kind of say, hey, listen, I have to, trade down from my fancy luxury, organic, whatever it may be, to more of a realistic price point good in terms of groceries as well as other goods. So again, Walmart, nice earnings, but what does it tell us about the underlying health of the economy? I think that's the bigger question. Okay, so that's where we are. Again, $75 up here, really good area of resistance on Walmart. I wouldn't be surprised if we end back below 74 on the day. Deere reported earnings this morning. DE is the symbol on this one. And so far, it's up fractionally on the morning session, but not a big move on that one. I don't really have any major levels because the stock's not moving enough for us. And then if we look at this one here, folks, this is Alibaba. Alibaba reported kind of poor earnings, flushed initially, but is actually rebounding pretty nicely. Yesterday, it closed at 79 and change. It's trading at 78. So not a big move on that stock. There. Now, JD, which is another Chinese stock, also reported. This is another retailer, e-commerce play in China, and that stock is trading up nicely. Yesterday closing looks like around 26. It's trading at 27.20-ish. Not a big move, but nonetheless, it is higher. Now, yesterday after the bell, Cisco reported earnings. That stock is pushing up. I put these lines in on trading the close. I said, guys, here's your level to watch. This upsloping trend line and this flat line right here. And lo and behold, if we go to our intraday chart, look at what we're hitting up against. Look at what we just tagged. Isn't that amazing, folks? I literally put these lines in yesterday after hours during trading the close. If you go back and watch that episode, you can actually see the line there. and it was right here. This was that lower line. And look, price literally this morning pierced it and is now pulling back off of it. Power of charts, folks. The power of charts compel us all here. All right, so that's where we are in the earnings market pre-action here as we continue through. Overall, if we flip to some of the semiconductors, we are seeing NVIDIA, which had a nice pop on that news. NVIDIA actually tagged a key level here. So this was my first big level. I've had this on, I think, since yesterday in the game plan. You can go back to yesterday's game plan and obviously see it. But there was a big level right here of resistance. Looks like pre-market, we actually pierced it here. You can see right here, and now we're starting to sell off. So I actually think this stock could come back in decently and actually go negative. It was actually trading negative on the morning session before that news came out. So there was something weak about it, probably just that it was overbought by so much, rallying, I think, from low to high about 31 to 32% from last week's Monday low, which is just an incredible move, guys. All right, absolutely incredible. All right, other stocks in motion this morning. Let's take a look here. A couple of my favorites. I'm going to mention one of my favorites here, ALB. This is getting a little bit of a bid pre-market, but take a look at this chart, guys. This is a kind of lithium play. It's again, obviously, though, that's used in batteries and so on and so forth. But you have to say that this is getting very attractive on the daily chart. Look at this pivot line going back to 09. So this is the Great Recession lows in 09. Kisses here, hits right here in COVID. And then look at where we are. We're coming very close to this level. So this is a chart that's very interesting. This was a $300 stock. It's now down to basically 70, closed at 72.85 yesterday. It's up a little pre-market. But I do think it's an intriguing one in terms of price action. So just keep an eye on that, guys, in the next few sessions. Another stock that I'm very intrigued by is this semiconductor name, Wolf. Wolf, again, coming into some major technical support. This is they basically do chips that more go into, electric vehicles and different things like that. So they're not so much in the AI space, which is probably why it's been left for dead. But one of the things that intrigues me about Wolf, guys, Wolf Speed is the name of the company, WOLF, is that they have about 2.5 billion in cash, and they own the market cap is only $1.4 billion. So, if I'm an activist investor, I would be looking at this and saying, wait a minute. So it's trading $1 billion below cash. They do about $500 million in revenue a year. Any sort of positive sign on this chart, and this chart could go parabolic. It actually has about 26% of the float is short as well. So it's got a massive short squeeze potential. And look at this. It's trading at levels going back to the 01, basically the lows of the dot-com collapse. That's incredible, folks. So again, I'm just kind of pointing out to you guys some sleeper plays that I'm keeping a very, very close eye on here. I actually do have a position in Wolf as well as ALB because I honestly like them so much down in this range. All right, so just a couple little sleeper tidbits in today's game plan of some potential swing trade opportunities. I do want to flip over to Bitcoin. Let's get into Bitcoin here and flip over to the charts. And what we could see on Bitcoin here, Bitcoin is not really doing a whole lot, frankly. And again, a little disappointing for Bitcoin bulls here because, again, here you have a stock market that's trading up again on the day, and Bitcoin is up a little bit, but it's struggling. I mean, this pivot line here at this 61-ish level is just keeping it under wraps. And I think the biggest risk we have on Bitcoin is if the stock market rolls over and collapses, right? If that happens, Bitcoin's in trouble. We saw it on the last big drop. And right now, the stock market, again, flipping back to the SPY, the stock market is not only in the triangle of death, but it's actually pre-market above that. So it's even more overbought in the short term. And again, just any sort of small pullback, let's just say it's even a small pullback on the S&P, it does make Bitcoin vulnerable for a pullback. So the key is this. If Bitcoin can close above this trend line here at currently around 61,000 and confirm, I then think it has that upside bias to get back to this 68, 69,000 level. If not, and especially if the stock market rolls over, watch out below. This thing could really start taking a beating again. Let's look at Solana. Solana, folks, again, Solana had this great big move up. I unloaded our long and smart money crypto right up in this range. We took our profits. So far, so good. The concern on Solana is that it's had a big reversal move. All right, so we're going to get into some nitty gritty here on education. See this candle here? This is what we call a wide range green candle. So it's notice how big it is, right? Big, chunky, long green candle. When you look at the bars, you have 1, 2, 3. Notice how on the third bar it closes below the green portion. That negates the power of the bullish move when you get that. All right, that negates any inside bar bullish consolidation. Then look at what's happened since then. Small green, small green, small red, small red. Notice how these are all inside of this red candle. That means the bearish flag pattern is intact. So on a very short-term basis, Solana is making a small bearish pattern. Now, if that bearish pattern were to negate, you would need to close above the red of this candle in the upper areas. We'd basically have to get above on a daily closing basis the 154 level. But again, my point is that these candles tell us something. Every candle can potentially tell us a probability shift. And I think, again, as you take the Winning Trader series, as you study that more and more, you start to get these little nuances that really do help you understand what is the probability of the move. What, based on where we are, what's the probability for the next, couple days to week? What's the probability? And to do that, you would go, if let's say you want to know, well, what do we think about the next month or two? Well, go to your weekly chart. All right. Weekly charts can tell us that. Right. So if you ask me, okay, well, what's your prognosis for the next 6 to 12 months? I would say, well, as long as you hold this level on Solana around this 120 level, this is all on the weekly chart, choppy sideways bullish consolidation. So yeah, shorter term over the next few days to 3 to 5 days, let's say the chart is weak, but as long as it doesn't get and close and confirm below 120, it's in a bigger bullish consolidation pattern. If it closes below here and confirms, that's where problematic issues arise, right? Then you can actually fail the bullish pattern here on the bigger time frame. So each time frame can tell you something, and each little candle, believe it or not, can really give you insights into what the charts are telling us. All right, let's continue on to gold real quick here. Gold is, and this is interesting. Gold was actually rallying early, and then on this data, people said, well, why the heck am I holding gold when the markets are risk on, baby? This economic news, and I'm being somewhat facetious here, but the retail crowd is saying, hey, this is great news. Even the talking heads on CNBC, hey, this is great news. We're seeing good earnings from Walmart, even though cough cough, people trading down from higher end retail to Walmart. And by the way, I go to Walmart even now. I mean, prices are so insane. I go to Walmart sometimes to do my shopping. So I want to be clear on that too. But then you also have economic data like jobless claims, which normally don't matter, but last week and this week now they do matter. Those came in a little bit better than expected. And obviously retail sales. Again, retail sales is tricky, right? Because on retail sales, you have to ask yourself, well, let's look in depth. All right, retail sales headline number is good, but the question has to be asked, well, let's look at delinquency rates on credit cards. Oh, wait, those are spiking pretty dramatically. Let's look at car loan delinquency. So my point is that people are putting money on credit cards. The problem is they're not necessarily paying them off. It's just running balances bigger and bigger. And you can see the credit card debt numbers going bigger and bigger as well. The Federal Reserve actually releases this data on a monthly basis or quarterly basis. But really it's unreported. It's not like it's a headline number. You actually have to go searching for it just a little bit. Okay, in any case, back to gold. Gold under a little bit of pressure here. We have our levels on gold. So level on gold, 2,400 would be support. Resistance would be 2,470. Again, we can continue to follow that. Silver. Now, silver is looking a little bit better here. Can silver close above this level? If it does, we need to see confirmation. If it confirms, you could be headed back up. All right. So again, I think the good economic data is helping silver relative to gold today. And this is the double-edged sword of silver, right? Silver is great when the economy's great, but at the same time, when the economy weakens, gold does better than silver because silver, again, is a partial industrial metal. Taking a look at the oil chart here, oil getting a small bounce on the back of good economic data there after 2 down days. Still nothing going on here. We're kind of literally I would say we're almost perfectly equidistant from the high end of resistance and the low end of support. And then lastly, natural gas. Can it finally break out above these levels? And I would say it's a big question mark at this point. Looks like we are fractionally above this line, but we got to see. We closed above it yesterday. Can we confirm? Can we confirm with a close over 235? If that happens, we should go to 255. I might even think about shorting it at that level should it get up there. All right. So again, that's just your roundup of markets out there. I do want to flip back to the S&P. Let's go to the intraday. Intraday S&P is kind of pausing here, not really much going on. That could be bullish consolidation on the pre-market, so it might insinuate a little bit of early upside when the market opens here in about 8 minutes. So we'll go from there. But as always, folks, I'm here to bring you the honest answers based on technical analysis, giving you the insights on options X, the maneuverings, the economic data, the truth, essentially, of what the data really is telling us. Now, again, remember, markets don't always react initially based on truth. The markets only react to truth when it matters. And that's important. When the narrative, especially with options X, can be maneuvered and the institutions want a move to occur, they will facilitate that move. They'll also facilitate the rug pull that can come on options X as well. So let's just remember that. You guys have a great rest of your day. I got to get to my trading room, the Apex Live Day Trading Room at verifiedinvesting.com. Come check us out there. I'll be there trading stocks all morning long. You guys have a good one. Take care.